Good morning, good evening, good afternoon. This is the Papa Joe Show, where Papa Joe knows. I am your host, Papa Joe, and I do appreciate you all being here today. So today we're going to take a look at a couple different things around inflation, cryptocurrency, and in general, what entirely is going on with the housing market. And as we've talked here recently, the housing market and any debt-based system is in fact the bedrock, unfortunately, of any economy that is set up that way. So fun times for sure. If you are new to the channel, do me a favor and subscribe. I would really appreciate that. And then grab the bell if you like the content, want to be able to see when I go live. I do go live every day. I try to get there around 12:30 in Eastern. The whole goal around that is to just kind of keep it consistent for everybody. So anyways, if you want more Papa Joe stuff, I have a link in the description of the video for Patreon that I do. That is set up so that I can have fun with taking the gloves off, really dig into things, where I do early access interviews, stuff like that. And then if you want one-on-one stuff with me, I have a company that's scrolling on the bottom screen and link in the description of the video where I do consultations and fun stuff. And then, of course, check out Crypto Confidential. If you want a group-related educational around cryptocurrency, blockchain, living the crypto life, yeah, that's what that's for. So check it out if you want to. We have an event coming up, and I will be cooking some brisket, probably some ribs, and some other stuff. I don't know about sides. That's going to be someone else's stuff, but we'll be having a good time for sure. So anyhow, thank you all for being here today. Stick around to the end of the show. I'm going to use the chat that is running live as a Q&A. So if any questions, concerns, comments, whatever, throw them in there, and I'll try to address them as we get to the end of the show. So let's jump right into the content, shall we? Today, markets are down, as I'm sure all of you know. I always check these in the morning and the afternoon and whatnot as well. So I don't really have time between my show and meetings and all that fun stuff to get in here. So I look at it with you guys. So anyways, and as my regulars, you guys and gals know that I look for sentiment, high level, connect the dots kind of stuff for the most part. The Dow should not be jumping and gapping. Realistically, any market shouldn't be jumping and gapping like that. Like this is on the hour too. This shouldn't be doing this. What's it on the day? What's the day look like? It's gapping too. That's a sign that the market, everything that I've ever looked into, whatnot, that's a sign that the stupid market is not healthy. So the Dow, the NASDAQ is doing exactly the same. Those look identical. That's crazy, or almost identical. Whatever. It's S&P 500 as well. Gold, silver. Keep an eye on these because these are technically our base, whether people want to believe it or not, whether you've learned that or not. For the past more than 5,000 years, gold has been sound money. Whether the hedge funds, another thing is boring, blah, blah, blah. Well, if you compare gold versus the entire stock market for the past 20, 30 years, gold has outperformed by a lot. By the way, Papua New Guinea coffee. What are you guys and gals drinking today? Throw it in the chat. I would love to hear about it. And if you're not following Divi and the Divi project, you might really want to consider that. Looks like they had a nice wick up to 3 cents. That's pretty nice. Pay attention to Divi. They're building a foundation and they're launching some serious stuff. If you know about their La Liga, you know about their wallet, their self-custody, all the stuff about getting your coins off of exchanges. Well, you should really consider taking a look at the Divi wallet because it is getting stuff off of exchanges and it is self-custody. And with their native token, you can earn a residual income, which is fantastic. So anyhow, Matic is also something you can do a residual income from. I saw somebody ask about the Matic and Bitcoin Bullet was you, I think. So I'll address that towards the end of the show because it is, in fact, very easy to do. If you add another residual income, is Axie. Just guys and gals, as I say all the time on my show, this is not legal, tax, or financial advice. Do your own research. Hopefully this is part of that research. But I do highly recommend taking a look at some of those guys. And as we like to look at, and some of the stuff we're going to talk about today is mortgage rates, mortgages, inflation, all that fun stuff. So tomorrow, the CPI, or the Consumer Price Index, I think it's tomorrow, or is it today? I think it's tomorrow. Maybe it's Wednesday. It's this week. The CPI will be released, which is what the Fed likes to use as their baseline for how the economy is doing from an inflationary standpoint. As we are all acutely aware, inflation has been running crazy recently. It's been running really hot. It's been hurting all of us in every way possible. Now, unfortunately, we don't get to control that. As I've mentioned in my Patreon in some detail, and I've kind of talked about it a little bit here, the the U.S. bond money supply that has been printed, more than 80% of its existence has been printed in the past more-ish 2 years. It's almost like the former administration was trying to kill the beast because, well, you give it too much rope, guess what's going to happen? Yeah, it's going to hang itself. That's what it's doing. Anyways, that is just my personal opinion, looking and connecting the dots at a high level. So how does all this connect, right? So interesting times for sure. As I've mentioned often on the show here, the housing market, and whether we like it or not, is the bedrock of our economy. When the housing market becomes problematic, when there are problems in the housing market, when it becomes too frothy, when it becomes too weird, kind of like it is right now. This is very reminiscent of 2008, 2006, 2007, so in that ballpark. If you guys don't know Economic Ninja, go check out his stuff. He is for sure a powerhouse of knowledge and wisdom when it comes to the housing market, gold, silver, things like that. He really does know his stuff. So everything when it comes to this, though, is tied to the housing market. All the mortgage-backed securities, all the CDOs, all that fun stuff that they do. They've treated the housing market as if it's a casino, as if it's a game, as if it's something they can just play with. Well, guess what? That's us. That's ours. It's supposed to be our protection, our stronghold, our castle, so to speak. Right? Get this. I'm a chief economist for a $5 billion real estate data and title company. Here are 5 things you need to know about the housing market now. Mortgage rates are higher, but they're still not high, which is true. We hit almost 6% for a 30-year fixed rate mortgage. Let's see if there are. So I disagree. They're not as high as they have been in the past, but the home prices when they were higher in the past were significantly lower, like a lot lower. Like if we go back here from a historical standpoint and go to the week, like we had these going back in the 1980s, it was up 18 something percent. Well, what was a home price in the 80s? Does anybody know? What was a home value then? Maybe $100,000, maybe for a nice house, maybe. I don't know. I don't remember. I was too young at that point to remember. Anyhow, mortgage rates are higher, and whatever they are though they are significantly higher than they were 3 months ago, which reduces housing buying power. They're around 6%, I guess, at the time of writing it, which is not 6% now. It's 5.3-ish%, and apparently is going down, falling off a cliff, as they've been saying. I read another article like mortgage rates are falling off a cliff, blah 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 blah. I'm like, that's not anything compared to what it was. Sorry, I am looking through a few things during the chat here. My apologies. All right, so mortgage rates are higher, but their historically standards are not high, says this guy. This chart from the St. Louis Fed shows the curve. I wouldn't believe anything that the St. Louis Fed or any Federal Reserve says anything. Affordability is increasingly a challenge for buyers. So I can tell you this right now, personally. It is not easy to buy a home that was 2 years ago that was $200,000, $300,000, $400,000 less than it is today. There are some homes in the area that I am looking that are $1 million more than they were a year ago. I don't know what they're smoking, but I tell you what, they've lost their mind. No one's going to buy a home that was a year ago $1 million less. I'm sorry. I mean, and I'm not kidding. That is realistically happening in this market. This is kind of the stuff that happened before, right? Home sellers were like, I'm gonna try and get in the FOMO, and they're gonna get in there and they're gonna try. I'm gonna put it up so high, let someone come in at way higher than I expected to be, but lower than I'm asking, and take it, kind of thing. No, no. Someone's gonna look at that data and they're not gonna do that. No. Home prices appreciation has been rapid in the last 2 years. That's because they printed so much money. That is a housing pricing is a direct correlation to inflation. It is an outward expression of inflation. The faster the home values increase, the more you can sit there and go, "Wow, inflation's seriously a problem." Realistically, that is how I look at it. I don't care if anyone, the PAPAJO meter on whatever. I don't know. You get what I'm saying. Anyhow, indeed, according to the data from the National Association of Realtors, the median sales price for existing homes was up 17% from last year. That's important because it's been practically impossible for house buying power to keep up. Consequently, affordability is declining. Very much so. If you work in corporate America, you get a cost of living wages increase. Well, most people that I have talked to had got 3% or less increase when we have a month-on-month increase of 8+% of inflation. That's a problem. That is a pay cut. That is not even keeping up with inflation. Therefore, you got a pay cut. If you had stayed the same, you might actually be better off, because when you get that pay raise, you actually pay more taxes. The more you make, the more they take. Excuse me. That's the way it works. So prepare for slower home price growth. Interesting stuff here. But just because affordability is challenged doesn't mean home prices are going to fall. Fleming says his research shows that during rising mortgage rate eras like we're experiencing now, the number of home sales does tend to decline, but house prices generally don't. Fewer sales and less price appreciation is the expectation. Last 2008, everything broke. Everything slowed down, and then it broke. Yeah. Housing market is cooling. Watch inventory levels and the amount of seller price reductions on listings, which is exactly what I have been doing. I was telling my wife early in June, was like, by the end of June, there will be very few people who can go and get a mortgage that can afford a house at these prices. A decent house at these prices, right? There are homes that can be fixed up and whatnot and need work and everything, or if you want to be comparable to other homes, blah, 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 blah. There are stuff that you can do. But that's extra money you have to have on the side to be able to do this kind of stuff. So, homes list at an exorbitant amount of price. Beginning of July, the areas that I have marked for searches, I literally had probably 2 or 3 days of my phone blowing. I actually had to turn off the notifications. It was blowing up because of the amount of decreased in prices. It was almost 1,000 in a single zip code. That's significant decrease in prices. Anyhow, the inventory is sitting too, and it's still there. Most of those homes are actually still there, which is very interesting. Anyhow, these are the leading indicators where prices will go and how the increase in mortgage rates have affected demand. More inventory and more seller price reductions signal a cooling in the market. Says Fleming. For sellers, this means a reset on the expectation of how quickly their home will sell. Mere days on the market, you mean hours, actually literally minutes in some cases for this area, were never normal. In fact, the old adage, excuse me, used to be that sellers should typically expect their home to take up to 3 months on the market to sell. Of course, we're a long way from that yet, but sellers should expect to take longer to sell their homes. For buyers, expect less fierce competition to buy the home. So when the fierce competition, by the way, just for expectations for everybody, if you haven't been looking for a house recently, yeah, people were offering $100,000 cash over asking, waiving the inspections, and zero due diligence with a move-in date of like 2 weeks or less. And they were getting beat out by people who had $200,000, $300,000 over asking in cash. I'm not kidding. People were getting into homes. The AC was broken. The roof was leaking. Pipes were busted. Holes in the wall. And they literally sight unseen buy the house, 300,000 over asking. And they would and I'm not kidding. That is what was going on. So yeah, less fierce competition. Basically, you can actually put an offer in and have it considered normal, ask for closing, stuff like that. This is this is a problem. This is one of the main reasons I want to look at this. Consider an ARM and be a smart shopper. Given the current market, Fleming says it's easy to lose focus amid shifts in mortgage rates and other housing demand dynamics. The reality is some basic steps remain important and are not much different than any market. Shop around for the best mortgage, and in a rising rate market, investigate adjustable rate mortgages for the lower rate benefit. Make your choices based on home as shelter rather than an investment return opportunity, and have patience. This is what caused the problem before. The ARMs was the biggest problem because after their grace period was up, everything kicked in and we were in a very nasty mess. Banks are still doing ARMs. They really are. Oh, geez. U.S. inflation data will be messy. 5 things to know in Bitcoin this week. A potent combination of CPI figures and more and more make for a problematic week for Bitcoin price. So we're having CPI this week. I think next week or towards the end of the month, you have the second quarter GDP. And everyone's freaking out because Bitcoin is a risk asset. Well, in this community, Bitcoin is not. Bitcoin is a safe haven. In this community, Bitcoin is the exit strategy. Cryptocurrency is the exit strategy. The markets are going to fall off a cliff. People will rush into the cash, which will cause another inflationary problem. And it will be a very, very quick flow out of the stock market into the crypto markets. And then it'll be a very, very big problem because exchanges will freeze up. This is why the Divi wallet is such a big deal. People will be able to buy, sell, trade inside of the Divi wallet that's already there. That stuff is there. It is the first that I know of custodian wallet that does all of that stuff all at once inside of a wallet. Fantastic stuff. So Bitcoin starts another week and a precocious position, $20,000 ahead of fresh micro upheaval. So 200-week moving average causes headaches at around $20,850 in June. The June 10th weekly close was hardly anything special for Bitcoin USD, but the pair still managed its best 7 days growth in 7 months. Where is the other thingamabobber I was gonna point out? Basically, this dude is always throwing FUD. And every time I look at the stuff that he puts out, some of it makes sense, but a lot of it is just like, really, dude? Really? So basically, he's acting very much like a mainstream media. This is something that is very, very concerning or problematic with Cointelegraph. Cointelegraph is acting like that. I get it. People try to be realistic about stuff, but he's in a way telling the crypto community which direction things are going to be. And he's looking at it from a standpoint of, oh, this is going to get very, very, very bad for crypto. And it could collapse. Guys and gals, the whole market's going to come down. I've been saying this. All of crypto, all of the stock market, the bonds, everything's going to fall out of the sky. They've printed too much money. All of this is happening. At the same time, Three Arrows creditors get emergency hearings as founders fail to cooperate. If this will work, I hate CoinDesk's website. CoinDesk, if you ever watch this, please take this crap off the top like that. That is just stupid. Lock it at the top and leave it alone. All right. Creditors say that funds' remaining assets will be transferred or otherwise disposed of before creditors get their share. Interesting. Where in the world are Sue whatever and Kyle Davis, lawyers involved in the liquidation proceedings of Three Arrows Capital British Virgin Islands Fund, would certainly like to know, because the hedge fund founders have not been cooperating in the proceedings so far and their current location is unknown. In documents filed late Friday on the U.S. Bankruptcy Court for the Southern District of New York, lawyers acting on behalf of the creditors said the founders of the fund have not yet begun to cooperate with the proceedings in any meaningful manner. So Three Arrows went belly up. Celsius has locked all their stuff, but Celsius is on the path of trying to get everything under control before they actually do bankruptcy. Voyager went into bankruptcy, or is about to go into bankruptcy, because they are all connected. See, the bankers got involved and the irregular traditional investors got involved, and they're trying to create this similar stuff that everyone's used to, but they forget that cryptocurrency is outside of their system. Blockchain technology is not the stock market. Blockchain technology and these cryptocurrencies have stock market features. They are technology first. They're also everywhere and yet nowhere. Realistically speaking, you can't prove that anyone has the crypto. You can't say that it's there. The lawyer said that persons identifying themselves as Suze whatever and Kyle are, why are they even, and Kyle were present on an initial Zoom call, but their video and audio was turned off and they would not respond to questions posed directly to them, with only their legal representatives answering questions. Lawyers for creditors that visited 3O's Singapore office found it abandoned, according to court documents. Interesting. Why do people have to think that they have to have this traditional investment stuff? I get it that it's good to have custodians, and I actually, y'all know that I advise for Viva Capital. They're one of the few out there that have actually done their due diligence. They're actually partnering with the proper partnerships, building the proper security layers, protecting their customers' assets. The thing is, though, is that they're not trading their customers' assets like 3O's does or like Celsius does. They're not lending it out to other people. It is the true custodianship. And the reason it's set up is because, quite frankly, when you have hundreds of millions of dollars in crypto, it's a lot to manage. So you let a company manage it. It's kind of a different concept. This is very, 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 very different now. The collapse of all these things is going to cause interesting shade inside of Bitcoin, and the powers that be would like you and me to forget about that. They don't want you to know that they're causing this to come down. I mean, think about it. Like I talked about this last week. The correlation of all the different, like Luna, Celsius, 3 Arrows, dadgummit, Voyager. All these different platforms are going belly up. They're going belly up. Well, because guys and gals, they're all tied into the mainstream, the mainstream investment people, and they're used to doing this stuff. Time for them to stop. Time for them to start self-custodian or getting a real custodian. ING Bank spins off its crypto custody platform to GMEX Group. Interesting. The Netherlands-based ING Bank has spun off a sector, I guess, its cryptocurrency custody and post-trade infrastructure platform to GMX Group, a trading infrastructure firm that specializes in digital assets. Who knew that ING had a cryptocurrency custodian platform? I didn't. And I'm paying attention to this stuff. Crazy. The CEO of GMX was appointed chairman of Sector, I guess, whatever, not Sector, Pictor, whatever, which will continue to work with ING, according to a press release. Financial terms of the deal weren't disclosed. Guys, in spite of everything that's going on, you're still seeing the adoption, and it's crazy amazing. To the point of, well, guess what? Cryptocurrency is coming to credit cards. Will you one day use crypto for everyday purchases? Visa, MasterCard, and others are betting on it and taking steps to pave the way. Did y'all know that? Crazy stuff. Oh, my time went out on this. Whatever. Cryptocurrencies are a volatile investment today, but card companies, including Visa Incorporated and MasterCard Incorporated, same company owns both of those, anyhow, are betting crypto will one day be used routinely for everyday purchases, from food and clothes to plane tickets, and they don't want to be left behind when that happens. Consumers will blah, 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 blah. Talk, Papa Joe. Consumers now can make payments with cryptocurrencies linked to Visa and MasterCards, provided mainly by fintech companies, which everyone knows about the Litecoin card. My regulars know about the Litecoin card. Divvy, if I'm not mistaken, is working on something to where they can actually let you spend your rewards, spend your holdings out of the wallet, out of your self-custodian wallet. Yes, that's on the roadmap, unless that's changed. But y'all keep me honest. I say this often in the show. I don't want to be wrong. If I'm wrong, tell me, but you got to show me so that I can learn. But put it in the chat if I am wrong. Anyhow, but it's a niche market. And transactions generally depend on third parties converting the crypto to local currencies. Visa and MasterCard, the largest card networks in the U.S., say they are working on ways to handle handle the mechanics of crypto payments themselves. That's a new one. These efforts, if they succeed, would mark a major turning point, the first time that the decades-old networks would enable settling payments in assets beyond what most consider mainstream currencies. That's a big deal. That's a very big deal. If you're not paying attention to that, that's a very big deal. You need to be paying attention to it. All right, I am going to roll through the chat, answer some questions, say hey to people. I love all of you. Great to have you all here today. Yeah, I was a few minutes. So, good morning, y'all. Before our host arrives. Sorry, I was a minute late. Just trying to get a couple things tied up. Does anyone stake Matic? I have some on the OTC that I want to stake. And I know there are options. I do not want to run a validator node, which is very difficult, by the way. I have set one up. You have to have Linux experience. You have to know how to harden Linux. You have to set up 3 separate instances. One is the primary validator, the other is a proxy, and the other, if I'm not mistaken, is a secondary proxy in case the primary proxy goes down. You have to have elastic load balancing and all kinds of fun stuff. Sorry to get in the weeds. My technical brain just goes, woo. Anyhow. I do not want that at a validator. Any recommendations? So, Bitcoin Bull, let me pull this up real quick. And I do not want to accidentally show any of my stuff. Actually, Bitcoin Bull, ping. I'm gonna show this right now, but ping me separately. So it's wallet.polygon.technology/staking. There are validators. You can delegate to the validators. Some of them make 10% of your returns, 5% of your returns, 1% of your returns, 0% of your returns. Do your research on the validators and figure out who you trust the most. The way that you can do this is they have usually a website associated to what they are. If it doesn't load, I would pass them up. However, like these guys here, Over here, yeah, that's pretty good. This is out of Australia, it looks like. Buy Bitcoin and crypto in Australia. CoinStash. So they are running a validator for Matic, for Polygon. You can delegate to them. Okay. There's your owner, the signature, the signer, etc., etc. They get 3% of your commission, etc., etc. They have, this is what they have, their stuff, all that fun stuff. So you can literally do it inside of the Polygon platform. So check it out. Bitcoin Bull, everyone else. Hopefully that answers that for you, but that is really quick, simple, easy way to do that. So, oh, you did have another comment there as well. Look for a good APY. Well, the rewards calculator, this is across the board. You're right at approximately 10%. If they're giving you more than that, it's going to be like a Celsius or something like that, and that is not delegating from your wallet to theirs, or to their to their wallet, to their validator. Excuse me. So you get about just under 10% right now, whatever you put in. So something to keep in mind. Hopefully that answers your question, Bitcoin Bull. Excuse me. What's going on, Tom? How you doing, brother? I appreciate you being here today. We got Busy Mountain in the house. What's up? Good morning. Good morning. Good morning. Who else we got here today? Doop, doop, doop. Just looking through the chat. Conversations here is very, very great here. Let's see here. Bitcoin Queen, what's up? Thanks for popping in today. I appreciate that. Hopefully you've been doing really, really well recently. I haven't caught up with you in a little while. Hopefully you've been doing good. We got Carrie in the house. What's up, Carrie? How are you today? Thanks for jumping in and being part of the show. I do appreciate it. Daddy-O, not first. No, but it's awesome to have you here. I do appreciate you being here for sure. Who else we got here today? Carolyn F. and new in Divi, and your thoughts. Thanks. So Divi, the Divi project. If I can spell. If you are not familiar with what they're doing and their roadmap, you really need to pay attention to what they're doing. Go over to their blog, and I am not sharing my screen. I apologize. Go to the blog. Did you guys know that they're setting up in Dubai an office, that they are landed a partnership with La Liga. La Liga is the largest soccer league, as we call it, or football league, runs the rest of the world. And they have their logos flashing inside of the field, on the jerseys of the players, on the field, etc., etc. Commercials, things like that. Just like McDonald's, just like Nike. Divi does that. Divi is a sleeping giant. Divi allows you to stake inside of their platform. You can you can stake your coins. You can also run a validator node. Crazy stuff. So the validator nodes, copper requires 100,000, silver requires 300,000, gold requires 1 million. Platinum requires 5 million, and I'm pretty sure diamond requires 10 million of the tokens. So 3 million Divi. Your yearly reward is about just under $13,000. That's a pretty good return. You can't find that realistically. 18.5%. It's pretty good. Park some money there, whatever. I'm not giving financial advice, but there's a lot of stuff that Divi is doing. If you have more questions, Caroline, do me a favor and scrolling above the screen right now, right about here, grab some time with me and I'll walk you through it. I do consultations on that for sure. Had coffee this morning? Yes, I do coffee all the time, literally. Like I drink that and then I go drink a huge glass of water with lime in it. I love lime water. It's much, much better. What's going on, Johnny Mattis? How you doing today? I appreciate you jumping in today. Marky, what's up? How you been? Thanks for jumping in today. I do appreciate it very much. Let's see. You guys I love it. Busy Mountain, thanks for helping out. Do appreciate that. That's fantastic. You have been you keep telling your husband this because he's a builder. Okay. Well, he'll know directly, being a builder, what the pricing of stuff is. New home builds are probably starting to slow. I don't know. It's very interesting. I would be curious to see what he thinks. So who else we got in the chat here today? Just looking through here, everyone. Bear with me. Would be a nice birthday present on the 29th and see Flashbang go away, Tom. Yeah, Flashbang would be awesome to make it that be go away. Stuff's happening. We'll maybe talk about that on the Patreon show later. Just looking through here. You guys are having a fantastic conversation. I love it. I love it. I love it. I love it. I love the fact that we have that. By the way, there is a private Telegram channel for the Patreon show, and that's right here. If you want to join that, it's only $5 a month, but I take the gloves off, the early access venue, stuff like that. That's where I have a lot more detail on stuff. Sometimes we talk about some similar stuff, but I really get into detail on it. And other times, I really go off on different tangents and have a good time. So anyhow. Oh, fun. Let's see here. Who else? Okay, cool. All right, guys and gals, I'm going to jump and run. I should have my regular show this afternoon at 4:30 p.m. Eastern Time for the Patreon. Jump in, check it out. If you have not joined Crypto Confidential, you really should consider it. It is an investment, but it is definitely worth checking out because you get access to folks who really know what they're doing. There is legal advice in there that is actual legal advice. There is a community, and a lot of you have already signed up. I know who has. And it is very, very fantastic. They have a newsletter, detailed information that you're really not going to find anywhere else. And then also, like I said, the community around that is pretty cool. There's an event coming up, and I've got a big, huge smoker, and I will be making some brisket, possibly and probably some ribs, and maybe some other stuff too. I don't know yet. Depends on how many people are coming. So, but that is private to the Crypto Confidential group. So check it out. It's definitely fun. It's definitely worth it. And I would greatly appreciate that. Link helps this channel out. That is for sure. Grab that link there. Anyways, you guys have a beautiful, wonderful day, and I will see you all this afternoon. Take it easy.